Hey everybody, Rob Maurer here. Welcome back to Tesla Daily. Today we've got a lot of industry news to sort through, probably impacting Tesla stock, the performance that we saw today. So we'll take a look at that. Then we do have a few other items as well. But we'll start there. Tesla down 4.8% today to start the week, closing at $197.36. The Nasdaq up 1.1% today, almost 1.2%. So significant underperformance. That deviation seemed to only increase throughout the day. A little bit of a rebound towards the end of the day, but not the best day for Tesla today. A lot of this, I think, being attributed to some headlines around Panasonic. They had their earnings report today and talked about demand for batteries relating to EVs, and that is getting pulled in with Tesla, of course. So here we can see the Reuters headline, Tesla falls as production cut by battery supplier Panasonic fans EV demand fears. And then if we do actually look at some of these things that Panasonic said on their earnings call, they specifically noted that for Tesla, or not for Tesla specifically, but they say that the IRA, the Inflation Reduction Act, has a price ceiling up to $80,000, and since the high-end models exceed that level, demand decreased. So again, not saying Tesla specifically there, but obviously Panasonic works very closely with Tesla, and that feeding into some of the headlines here, alongside comments from Panasonic. However, as usual, if we take a little bit closer of a look here, this isn't quite the scenario that seems to have been portrayed today, because if we look at Panasonic's release, they also say that furthermore, the company decided to set the automotive battery business as the priority investment area and will proceed with management initiatives by taking into consideration the revision and replacement of our business portfolio towards shifting to a growth phase. So, okay, that sounds a little bit different than demand concerns like we're seeing in the headline from Reuters and other media today. And if we look a little bit closer, they've also kind of reiterated that here when they talk about their downward revision to net sales. So overall, a reduction in guidance for Panasonic. But they say that the downward revision of sales is due mainly to the impact of accounting treatment for the US IRA tax credit, as well as the deteriorating market conditions in lifestyle and industry, despite the upward forecast for sales in automotive, with the gradual recovery of automobile production and in connect with favorable sales in avionics. So although we're getting these headlines about demand and some of the comments here about the price cap with the IRA and the impact of that, Panasonic in general is guiding for an increase in automotive, despite the upward forecast for sales in automotive here, as we can see from their release. And in this part, also talking about that being a priority investment area, shifting it to a growth phase. So as usual, when we look at the details a little bit closer, it is painting a very different picture. So they do give us a little bit more insight on this in their slide deck that was released with earnings. So I'm going to zoom in here on sales by region, because this is really what the focus is, and this is what I think is being a little bit misinterpreted by the market today. So Panasonic, of course, they have Giga Nevada. Then they also have the 18650 production in Japan. So this is Tesla's sort of legacy battery cell that they have been using for Model S and Model X for a long time. So you can see how the volumes compare by region, and most recently here in Q3, a pretty significant drop for Japan specifically, however, holding steady for production as it has kind of seemed to have leveled out here for the North American volume, which again, that would be from Giga Nevada supplying Tesla from there. So when we take that in conjunction with what Panasonic actually said here, obviously they're saying that for the S and the X, as potentially influenced by the cap on the Inflation Reduction Act credit, as those sales are a little bit tougher, they're going to reduce 18650 production in Japan. But as we can see here, that's a small portion of the overall total. Of course, we've already seen that sort of come through in the Q3 results from Tesla. We knew back in early October that Model S and Model X production was down pretty significantly this quarter. Historically, that may have been somewhere around 20,000 units. Tesla kind of only getting back to that peak for a couple of quarters here since the refresh. But 20 to 25,000. Now I think last quarter that was more around 15,000, maybe 16. So we kind of already knew this, right? Panasonic said that they're dropping this by 60%, or they actually have dropped this production by 60% to account for this. But again, focused on S and X, the rest of the business is growing. They specifically say down here, in the second half in Japan, they're going to prevent further deterioration in profitability by optimizing fixed costs to align with lower demand. In North America, we will respond to the strong demand, aiming to increase profitability. So although, and here's the 60% drop that they talk about for Q2 for the 18650s. So Although the portion that they're talking about here that is being reduced or restricted by lower demand is obviously a small percent of the total, and they talk about growing the rest of the percent of the total. These are the type of headlines that we get. Demand fears. I'm not sure what Financial Times. Panasonic blames lackluster Tesla demand for cuts of profit outlook. Sort of, but not really. So hopefully that context is helpful. And then they also shared some interesting details in terms of their profitability. So they did say that their energy sort of portion of the business, as they split it out here, they say that excluding the impact of the Inflation Reduction Act credits, this would have actually been not profitable for this quarter specifically. And they actually break down in pretty good detail here the impact of the Inflation Reduction Act. So I'll zoom in again here. But they say that the favorable impacts recorded plus 21.4 billion yen for them this quarter. They say that that's equal to 46.5 billion yen tax credit for second quarter sales, minus 25.1 billion yen for effective use with customers. So my take on this is that they've got, in total, about 46.5 billion yen in credits. We'll convert that to dollars in a second. And to me, how I'm reading this is it seems to be split, 45, 55 or so with the customer is kind of my take on it. So the 21.4 billion yen there, that would be $143 million of benefit that Panasonic is saying that they got. And then $168 million from this 25.1 billion yen, I believe, is going to customers if I'm interpreting their results here correctly. So we don't get that kind of detailed information from Tesla, but that kind of gives us a sense of where this might be in terms of the battery manufacturing credit, to be clear, in terms of the impact on Tesla for that. And that's separate from the $7,500 consumer-facing tax credit. This would be for manufacturing of battery cells and modules, or packs. I can't remember what the level is. It's $35 per kilowatt hour and $10 per kilowatt hour for each of those. So that's what this is coming from, the Panasonic's talking about here. So again, a lot of interesting information here, but I think the overall takeaway is probably that, they're stepping back 18650 production in line with what we have already seen from Tesla with lower S and X sales. That does give us a very strong indicator that we should not be expecting that to return anytime soon to anything significantly above, I think, what we saw in Q3. So that is important to know. But again, I don't think that many people were probably expecting that at this point in this environment. So that would be the big thing. And then they do, again, say that they are increasing production, responding to strong demand in North America. So that's a good point. And then I think also potentially influencing the stock today, we did over the weekend get agreements for the UAW and Stellantis. So following Ford, and then this morning got an agreement with GM, as we can see here on the UAW page. So the strikes, I think, are now over. These are tentative agreements. They need to still be ratified, but I believe this is now wrapped up. If not, it will be wrapped up very soon. And then possibly playing into Tesla today, Sean Fain did say that they will now organize like they have never organized before at non-union plants, and that, quote, when we return to the bargaining table in 2028, it won't just be with the big three, but with the big five or the big six, end quote. So that could also be having an impact on what we're seeing today, just sort of a response to this comments that there will be, if nothing else, a little bit more pressure being put on for Tesla and for other non-union OEMs following these results with the big three. So we'll see on that. And then one other thing that may have also influenced things a little bit today, I think Gary Black pointed this out on X. So on Semiconductor, they had disappointing results. Their stock is down 22%. They lowered guidance. They said that this is reduced. They're seeing reduced demand from some European automotive customers that are working through inventory, as well as risks to the auto sector demand caused by higher interest rates. So overall, we're seeing, a lot of that type of commentary. I think the Panasonic one being a little bit misinterpreted, actually a very similar update to what we heard from LG, where they're seeing maybe a reduction from international battery production, but an increase in North America as a response to the Inflation Reduction Act. But again, seeing this comment from On Semi, they had some interesting comments in their earnings call too. I had to kind of chuckle because when I pulled up the transcript, I saw this name right away, which probably looks familiar to many of you, Parag Agarwal, obviously former Twitter CEO. Different one though. So I just thought that was kind of funny. Anyway, in the transcript, they said that for the full year, a single automotive OEM's recent reduction in demand will impact their billion-dollar target that they've now dropped to 800 million. So their CEO also in an interview with Bloomberg highlighted this and did specify that, so softer guide that we've seen, single outlier of a customer, they say that this is an automotive OEM in North America. So I don't know if this is a supplier of Tesla specifically, but that comment is interesting, specifically that it is one. I don't think it would be Tesla, especially if we pair that with comments from Panasonic about, what we highlighted here, increasing response and strong demand in North America. Those two comments wouldn't really fit. Maybe if there was a supplier switchover or something like that, but it wouldn't seem to really connect to the comments that were made from onsemi here. And then one other interesting thing, although, again, this is the headline about reduced demand in the automotive industry, their CEO did also say that demand is going up for EVs worldwide. He said, I know there's a lot of stories about softening demand, but that doesn't mean that demand is going down. Demand is actually increasing. So again, maybe reduced guidance and maybe softer demand than what was previously expected, but still they are seeing an EV demand increase. So I think a lot of the headlines today just kind of missing a lot of important context, and hopefully going through some of that stuff helps a bit. And then we also saw earnings reported from BYD today. These are pretty interesting. They did grow revenue for the quarter year over year by 38%. But most interestingly, net profit increased by 82%. So this was about a $1.4 billion profit for them for the quarter, which is, obviously a pretty strong result. And if we look at their gross margins, they actually increased this quarter pretty significantly, despite some of the pricing pressures and things like that we've seen in China. So they actually grew their gross margin quarter over quarter up to 22%. So pretty strong results there for BYD. I don't know if that's playing into the reaction for Tesla today at all, but I think the stronger that BYD's business is, the more that you could connect that with potentially margin pressures for Tesla, because the higher BYD's gross margin, the more room they have to be price competitive as well. Obviously, a little bit different of segments, but I think there's certainly some overlap in terms of what the consumers that they're competing for. So the higher that goes, the more price pressure you could imply for Tesla in China. So interesting to see those results as well. We should probably spend a little bit more time on those in the future. But moving on from those industry-related items today, we do have a little bit more from Motor Trend on the Highland Model 3. So they've posted a little bit of a detailed review on the suspension changes and things like chassis updates to the Highland Model 3. We're not going to go through anything specifically. It's all very detailed, but just wanted to kind of highlight that if it is something that you're interested in learning more about. They've got a pretty detailed review here and highlighting things that have changed with the suspension. As we've talked about before, their overall takeaways were that there are pretty significant upgrades here for comfort for the Highland Model 3. So that's there if you want to take a look at it. And then also an update on a story we have covered previously, which was that Europe was looking into potential, Chinese imported vehicles, EVs, that maybe were being subsidized by China and then coming into Europe a little bit more cheaply than they should be. So the South China Morning Post here is saying that primarily they are looking at three firms that are not Tesla. I thought I had those highlighted here. Let me see if I can find those quick. BYD, Motor, and Geely are apparently the ones that are most focused on. However, if the EU finds something and they want to change how EV imports are structured, obviously that could then have a side effect on Tesla. If that's not targeted by manufacturer, if there is something more that's changed with just China EV imports in general, that could, have ramifications for Tesla as well. So something to continue to keep an eye on, but at least for the moment, we're hearing that it's not specifically related to Tesla, which was what we kind of originally thought. There was a report that maybe it wasn't that way. Now reporting more towards that original thought. So we'll continue to keep an eye on that. And then just a couple of quick ones here. So GX on X spotted a Cybertruck frunk in action. So we've heard before that this was going to be powered. This makes that pretty clearly look pretty clearly like that is the case. So we're 1 month out from delivery day right now. We'll hear more about it, but fun to see that in action. And then Redditor, let's see, S3 Pyrian has noticed in Tesla parts catalog there is some information about a sport seat for the Model S. It looks like this would be for the Plaid version of the vehicle, perhaps a part of a track package, but potentially just some upgraded sport seats. You can kind of see some Plaid emblems built into the seats there, which would be kind of cool, but no information on them yet. We'll have to keep an eye out for more of this. I think we've heard some rumors about Highland Sport seats too, so there do seem to be some changes in the works right now for seats. And then the last couple of things, Hyundai has lowered the prices on the Ioniq 6, so they cut prices by up to $4,100 on the base version of the vehicle, lowering it now to $38,615. The higher trim versions of the vehicle also received price cuts, although a little bit less significant, more in the $2,000 to $3,000 range for the Ioniq 6. And then lastly, kind of a, I guess, fun or a humorous note to wrap up on for today. Toyota is working on developing a manual transmission for their EV cars, or at least a faux manual transmission. It even would have things like a clutch system. Apparently, it would even be able to stall. It's pretty much the exact opposite of what first principles thinking would get you. But engineers, apparently, according to this report from, I don't have the name of the blog here, but they say that engineers say the system has been created as a part of a move to make electric vehicles fun to drive, and in response to Chairman Akio Toyoda's brief to ensure electric cars are not simply a commodity. So typical Toyota behavior, I guess, but interesting to see what they are spending their R&D time on. All right, that'll wrap it up for today, though. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on X at Tesla Podcast. And we'll see you tomorrow for the Tuesday, October 31st episode of Tesla Daily. Thank you.